Cosa?
Che ne è? Cosa? Io sono.
Good evening, students. Welcome to the first FAC 3701 class. My name is Bronwyn Wright. I am the Regional Academic Coordinator for the Western Cape region for tutorial support. And your tutor this evening will be Mr. Tulani Olifant. He is unfortunately having a bit of problems with his camera, so his camera will not be working this evening, but hopefully from next week he will be able to show his face. Just some important housekeeping rules. Please ensure that when you join, your mic and video is off. If you need to ask a question, you simply unmute and you can ask the question, or you can use the raise your hand function. However, sometimes when the tutors are getting a bit too busy, then they do not see the raise your hand function as well as what we anticipated. So you just unmute and ask your question. For all study support related queries, please send an email to ctntut@unisa.ac.za. If you have any student admin related queries, you can forward those to capetown@unisa.ac.za. Unfortunately, Kulani will not be able to respond to such questions as he is an independent contractor and is just helping us out as a subject specialist for FAC 3701. Just other important information, very important from our side. The session is recorded, so it will be made available to you within 72 hours. You will be able to access the link to the recordings as well as all resources posted on the Western Cape region portal. I have pasted a link in the chat. If you're not able to see it, please just ask Kulani so that he can copy and paste it for you. Where you can access the Western Cape region, you will need to join the site and then log in with your MyUnisa credentials. If you have joined as a guest, please remember that it is sometimes a little bit problematic for students if they join as guests because they don't see all the functionality of the chat, and you can also miss out on previous conversations. So it's always important to join teams with your MyUnisa credentials. And to do this, you will need to open another browser like Firefox if you're using Google for your work or other personal reasons, or you can go to Google incognito mode and then just join the teams from there with your UNISA credentials. So please keep that in mind. Also, what we require you to do is complete the feedback form at the end of the session. And I also just want to make it known that the academic, who is Yasin Muhammad, will be popping in from time to time just to check that everything is in order and that we are doing what we are saying that we are doing. So with that, I'm not going to take up too much of your time. I see there are a couple of you already in the session, and it is a lot of work to get through. So I'm going to hand over to Kulani to start his session. And welcome.
Thank you, Bronwyn, for the introduction. And welcome to everyone to our first session for the semester. I think Bronwyn has covered most of the admin protocols. But I think just to reiterate again, is that just ensure that your video remains switched off throughout the duration of the session. Also make sure that your microphones are also switched off because sometimes we've got people in the background that are making all kind of noise. And also what I'll also do is, or what Bronwyn has done for us, there is an attendance register link that is available on the chat box, but I'll repost it again for you. Please complete that register for us because we want to see who's here. So I've just repasted the link just now. And then I think the third one is, or the second one is for, in terms of the recording, in terms of the session that we have here, it will be recorded and the recording will be available within the space of, let's say, 72 hours, okay? And then there's also a link in the chat box where you can access those recordings and other resources as well relating to the module or any other module in this regard, okay? And then what I'll do just shortly before we leave or in the duration of the session, I'll also give you a link where you can do the when you can give feedback. So it's a feedback form, and I'll paste that link over as well to give you that. Okay. And then that's about it from my side regarding the admin. Oh, also as well in terms of if you have any support related queries, you will need to redirect them to ctntart@unisa.ac.za. So Bronwyn and the team will be able to assist with that. Okay. Okay. So I think for today there's nothing much that you do, but there is much that you will gain out from the question, right? So the schedule itself, or the schedule for the duration of the period, is loaded on my UNISA, so that you can see and then prepare upfront in terms of which questions you're going to do from which material or from which tablet. So it is advisable that, sorry, it is advisable that you actually go through those questions, you attempt those questions under exam conditions, because what that does is it then actually give you an indication as to what principles are you good at or what principles do you lack in. And then perhaps this session is then going to be that platform to say, I need to actually then pick up on this thing or on this principle. You know, if you still can't, then you raise a question, why is that done in that way, and so forth and so forth and so forth. You know, so the session is here to help you, but that's only if you're also helping yourself, because it will be not of importance if you just come to the sessions unprepared, whereas the material that you need to go through is made available to you and is indicated to you what resources is that. Okay, fine. Now the question that we're going to cover tonight, it's in tough letter FAC3701. And that is question 1, right? So what you can do during the session is that if you have a question, if you have a question, you can raise the hand, or you can unmute the mic and then ask that question. Also, in terms of you need to the participation from your side. So I'll be asking questions, and then from the meeting chart, you can then drop the answers, what you think. So it does not have to be the correct answer, but I'm trying to perhaps teach you, or I'm trying to assist you with is the thought process behind it. So if you understand the principles, you should be then able to give the correct answer or the suggested sort of response, you know. So, okay, yeah. And then, so okay, let's start again. So what I'll do is I'll just share my screen with you now in terms of the question where we're reading it. I think is this one. Just give me an indication that you are able to see what I have here on the screen. Just a yes. Okay. Okay, so question 1, it actually deals with IAS 12. So it's income taxes. So what we'll do is now that you are in an exam, and in an exam you've been given, so this is the question that you're confronted with in the exam, right? Let's say within you guys, I think you've got around about 3 hours to complete a question, whatever the time is, fine. So you will receive this question. So what is the first thing that you do when you receive this question? And this approach is my approach. You don't have to adopt it, right? But if it works for you, I think you can practice it and master it. But if it's not working for you, you need to adopt then a style that actually works for you, right? But this is an approach that I actually teach most people, right? So in between this question, during or in between this question is that I'll be trying to move around documents and around material, just to actually see you a complete picture of where do we actually get some of the things, right? Okay. Now, if I were you, so in the exam, I'll read the information and then highlight all the important stuff. So the following information is an extract, so that's very important. So it's an extract from the financial statement, from the statement of profit or loss and other comprehensive income, and notes of Kenton Limited for the financial year, which is the 31st December 2005. That's important. Okay. And then now you give in information your profit before tax, and then what items are included under profit before tax, your income, profit on sale of vehicle, your dividends, expenses, and then you've got warranty costs, right? So I think that also becomes important because we already know what we're dealing with here, right? Then we move on. We have interest and penalties. We've got depreciation for plant equipment, and we've got depreciation on motor vehicles. Fine. Now we're done with the narrative part. So now we're going to go through what the additional information is. Remember, at this point in time, you are just reading to have an understanding as to what is this scenario all about, right? So now you're not reading here to then start writing. That's not the point when you're receiving a question paper. Is to actually understand what it is that the scenario is all about, right? Because in between, it will perhaps give you a chance to preempt what they might ask, or what they're looking for as your requirement. So the following information regarding PPE of Kenton Limited is an extract. That is very important, because if I say it's an extract, this information has been taken from something that was already prepared, right? But I don't know what that thing is. But on top, they've already told us that what that extract is, right? Okay, but now here at the bottom, they're telling us this extract is from an asset register, and importantly, they're saying after the recording of all the assets transaction during the year, right? So they are saying to you, for number one, everything that you see here, everything that it's related to PPE has been recorded, right? And I'm going to show you now why is that the case. Fine. Now they're giving you the cost here of your property, plant, and equipment, the vehicles. They're giving you the carrying amounts at the end of 2004, 2005. They give you depreciation rates according to the respective assets. And then they also give you the tax base, right? 2004, 2005, and then they gave you a tax allowances rate. Right? So I think in your mind now, something about deferred tax calculation needs to be going through your mind, right? Because obviously you will need this information to do those calculations, but you're going to see when you get to the required as to what does the required cover, right? Yeah. Now we'll read on further. It says plant and equipment and motor vehicles were acquired January 2003. We know that already. We've seen that there. We know that already. So included in the cost on 1st of Jan was a motor vehicle with a cost price of 40K. This motor vehicle was sold in December 2005 for 35,000. Right. So we sold the vehicle, right? 31st of December 2005, which is the current year. So do we need to make an adjustment in terms of the information that they've already given us here on top? Yes or no? So this vehicle that was sold 31st of December 2005, do we need to make any adjustment in terms of either the tax basis or the carrying amounts that you've been given on top? Yes or no? Okay, we'll get to that. We'll get to that answer. We'll get to that answer later. Fine, and then we go on to say the carrying amount in tax base of the motor vehicle at the date of sale was 10,000 and 16,000 respectively. Okay. Now that information is given to you because remember, as soon as you dispose something or as soon as you sell something, For accounting purposes, what does that sale trigger? Or what is the transaction that is going to trigger for accounting purposes? But then as well, in terms of tax purposes, what is the event or what is the transaction that is going to trigger? So when you sell this asset, right? What is the transaction that is going to trigger for accounting purposes? And then what is the transaction or event that is going to trigger for tax purposes, okay? For accounting purposes, there is your answer. It can either be a profit or it can be a loss. But in this case in time, we know that it's going to be a profit. The same thing for tax purposes. For tax purposes, you can either have a gain or a loss, but we'll get there when we're doing the actual question. Right? Fine. Now it says here no other property, plant, and equipment were bought or sold during the current year or prior financial years. Fine. Now they are telling you that you do not look for other disposals or do not look for other acquisitions rather than what they provided you there. Fine, let's continue. So on 30th of November 2005, Canton Limited started to sell their products with a 2-year mechanical warranty, right? The warranty is an assurance type of warranty. So Canton made a provision in its annual financial statement for this future warranty cost to repair defective products returned by customers. So you go to a shop, you buy a microwave, and now what we do at the shop that we would estimate that perhaps so much customers in the next 12, then in the next 12, 24, 36, however, whichever, they might return these items because of they could be faulty, factory fault, or whatever it is. So that is the provision that we are making in this regard. If anyone should return any of the items that we sold, then this is the amount that we're providing for in order to be able to repair or fix those items. Right? So very importantly, the provision for warranty cost is not deductible for tax purposes. That's very important. But now are they saying that the actual warranty costs paid are the only ones that are deductible? Fine. So as you repair, or as the customers bring in their items for repair, and then as you incur those costs to repair those items, then only that portion of the actual cost paid to repair can then be deducted, right? So for as long as the provision, so let's say your provision is 60,000, right? For as long as the year on year, your provision sit on 60,000 as a closing balance with a carrying amount, then nothing in that regard can be deducted, right? But now if your provision has changed from 60,000 in the prior year, and then in the current year, it's sitting at 50. So the 10,000 difference then can be deducted as an expense for tax purposes. So this concept is the same concept that is contained in Section 7 Big B of the income tax as far as variable remuneration is concerned, that you will only deduct the actual amounts that are paid. So anything that is provision related, you cannot deduct up until the stage that it has been actually paid. Okay. The balance of the provision for warranty costs in the financial statements on 31st of December is 50,000. Okay. So we know that the balance of the provision is sitting at 50,000. So during the current year, no warranty costs were incurred in respect of the mechanical warranty given for products sold. So we know we haven't yet done any repairs or we haven't yet incurred any expenses as far as this provision is concerned. So we know we've raised 50,000 in 50,000, and the balance is still sitting at 50,000. We'll get to it now as to how do we deal with that for deferred tax purposes as well as for tax purposes. Deferred tax is provided for on all temporary differences according to the statement of okay. That's very important because if they ask you, or if they tell you that you need to do a deferred tax balance or a deferred tax movement, and then temporal differences must be calculated in accordance to, so all temporal differences must be in accordance to the SFP method or approach. So if you don't know that, then it's a sort of a situation of you're going to waste your time on something that's not required, and then thereby losing marks, right? And we'll get to that just now as to what is that. So now what I'm going to do is I'm just going to show you a screen in terms of what is this approach that that they're speaking about. Okay, so I'm just going to unshare this quickly and then share the document that I want to show you. Okay, and then I'll share. Okay, can you see this screen? So in front of me, I have a table here. Can you see this table here? It says deferred tax calculation, right? Okay, great stuff. Now, this is what they call your financial position approach, right? And then you will see here I have assets and I've got liabilities, but I'm going to explain to you later on in terms of your taxable temporal differences and as well as your deductible deductible temporal differences. Okay, so in a nutshell, it's your future the tax that is payable in future, and then here is what you can deduct in future as far as the liabilities are concerned. Okay, and then here at the end I have an indicator. What I actually call it is either you can say it's a liability, or we can either say it's an asset, right? So sometimes in the questions they're going to ask you that you need to indicate whether the deferred tax movement is an asset or a liability, or you need to indicate whether the deferred tax balance is an asset or liability. So if you don't indicate that, then you would not have answered what the required is saying. Okay, fine. So let's move back again to the original screen that we're at. Okay, which is, yes, this one. Yes, okay, fine, it's this one, fine. Now, the SA normal tax rate was 28% for both 2004 and 2005. Okay, that's also important. Now, this is the important part. Now you've understood what the scenario is all about, right? And now the important part is the required, because the required now you need to read with comprehension that what is it that they're asking me? Okay. Now the first one they're saying to you that you need to calculate, right? Okay. There's a difference between calculate and there's a difference between prepare. And then I'm going to show you now in terms of what do I mean with that, because I know some students get confused when you ask them to calculate and prepare, right? So when I say to you prepare the deferred tax note, I am not saying to you calculate. And I'm going to show you now where the difference is, because when I'm saying prepare the relevant note to you, I am expecting you to do a disclosure note, right? So if I am saying to you prepare a note for deferred tax, and then you only do a calculation, then you have not addressed the required, right? And unfortunately, you can't expect to get marks. So your required in this case is saying calculate. So I need to see a calculation of the deferred tax balance, right, of Kenton Limited. And then the very important, they're saying for both years. We know the current year is 2005, and then we know the preceding year is 2000. Sorry, the current year is 2005. The preceding year is 2004. And then they're telling you that you need to calculate in accordance with the statement of financial position approach, right? Now, what's important that I've highlighted to you just now, you need to indicate whether your answer or your balance is an asset or it's a liability. That's part of the required that you need to answer, right? Fine. Now, if I just need to show you, if you read statement A, what your skeleton would look like, even before you start plotting in any figures, okay? I'm going to unshare and then share the skeleton with you. right? Okay, so the skeleton, where is the word now? Sorry, okay, so okay, I think all of you can see my screen, right? Okay, so this would be the skeleton that I would have drawn up before I even answer. So the moment I get to the required that says calculate the deferred tax balance for both, so the deferred tax balance using the statement of financial position approach for both years 2004 and 2005, right? So this is the skeleton that I would have. I know what the scenario is about. I already understood. I know what is the, I know I've been given balances for 2004 December. I know I've been given balances for 2005 December, right? So I know at least what it is that I'm dealing with. So this would be the skeleton that I would have noted on my answer sheet, right? So required B says you will need to calculate current tax expense in the statement of profit or loss and other comprehensive income of Canton Limited for the year ended 2005 December, right? And then there's a big note there highlighted, your movement in temporal differences in the current tax expense should be calculated using the statement of financial position approach. I'm going to show you now why that is included, because I know most people would have made a mistake of calculating that otherwise, because that's normally the case, because sometimes they will never ask you to do it this way, but now in this case, they're actually asking you, right? Okay. Now, I'm going to show you now the skeleton, how you would have answered a required B, right? So your required B skeleton would have looked something like this. You are telling the marker that I am calculating the current expense, right? Sorry. Now, in this current expense, you already know that. You already know what information that you've been given for, because you've already understood what's going on in there. So you'll see now when we're actually doing the question, it's only a matter of trying to plot there and there, there and there, there and there. Okay? Now we move on to C. C says, prepare the journal entry for the deferred tax movement in the statement of profit or loss and other comprehensive income of Canton for the year ending 31st June 2025. So what they're saying to you is, right, now once we're done preparing this statement, what we want to do is we would like to see what was the movement between this year. So the movement that will be reflected there, and what is that movement going to be that now we need to reflect either as an asset or as a liability in our statement of profit or loss. So that is that journal entry that we'll need to do, right? Okay. So what we're going to do, we're going to do a journal entry for that one, right? Now, the nice thing of understanding what the scenario is saying, as soon as you're done doing required one or required A, you can also address required C, because the information for required C is already contained in your answer in required A. That's what you're talking about when you're talking about a good exam technique. Understand the scenario, plot all your required, then you'll see where you can kill two birds with one stone. Like in this case, you can do required A and required B can be done in the same sort of attempt. Okay, fine. Now let's move on. Required B says you will need to prepare only the relevant, very important, only the relevant tax and deferred tax notes in the annual financial statements of Canton Limited for the year ended 31st December 2005, right? And your answer must comply with it first, okay? So it's very important that you go and memorize. That's the unfortunate part. you need to go and memorize in terms of what are all the applicable notes that one needs to prepare as far as IAS 12 is concerned, right? And it's fairly easy. It's fairly easy. So in whatever type letter that you pick up, you should be able to have an idea in terms of what it is that's included, or you pick up your descriptive accounting. You've got many good examples that you can use. Even your study guide in that matter. There's many skeletons in terms of what it is contained in that regard, right? So my suggestion to you is you need to go and memorize those, because if you don't, I don't know how you'll ever know. That's the unfortunate part, unfortunately, as far as the disclosure is concerned, right? Okay. Now, there's a note here at the bottom that says, so now I'm reading now in the question now at the bottom. The requirement says, ignore comparative figures and accounting policy notes. Okay, so now if this speaks to required deal. So if they say ignore comparative figures, which years for the notes are you going to do? Which financial years are you going to do? Or are you going to compile a disclosure for? So indeed, they say ignore comparative figures, right? Now, what I'm asking you, if they say ignore comparative figures, which disclosures of the relevant, which year they're going to disclose the required notes that they're asking you? Are you going to do 2005 only? Are you going to do 2004 only? Or are you going to do 2004 and 2005 together? First option, 2005 only. Second option, 2004 only. Or third option, I'm going to do 2005 and 2004. Which option is going to be?
I think it's going to be option 2005 only, because that's the current year that we are doing our financial statements.
Okay, that's correct. That's actually what the can you please mute your mic on your side, quickly? Okay. So who's unknown user, is it possible that you can just mute everyone? Up with you just now. Unmute. Okay. Sorry guys, just for protocol purposes, please mute. Once you're done speaking to me, please mute your mic, because otherwise there's an echo in the background, and I'm repeating myself here. Okay. Okay. So actually, that's what the statement means in terms of ignore comparative figures. Okay. So you're only going to do for the current financial year, which is the 31st of December, 2005. Okay. And then now, so what I'm going to try and do is, I'm going to try now and show you what that note will look like. Okay. Where is my? Sorry guys, do me a favor quickly, because I'm trying to mute everyone here. If you can mute your mic on from your side, because I can actually hear a repeat of myself every time I speak. Unknown user, please, can you mute your mic? Okay. So now in terms of your note, so when you prepare your note, you need to ensure that you are telling the marker in terms of who is the entity in question. And then the example here is Canton Limited. You need to tell the marker that this is the notes for the year ended 31st December. And then you need to tell the marker that this is an income tax expense note, right? And also in terms of, remember, they also ask you to do a deferred tax. So they said the relevant tax note as well as the deferred tax note, right? So this is your deferred tax note that you're going to show the mark that I'm doing the deferred tax note. Yeah, so it's very important that you actually say what it is that you're preparing, right? So this is just a basic accounting principles, or in terms of when you prepare financial statements. Okay. Now what we're going to do is we're now going to go to the question and answer the question step by step, right? So now in terms of how I answer the question is that we are going to deal line by line, and from line by line, when you're done with one line, we'll never come back again to that line, because we would have addressed that specific line in terms of all the requires that we have in the question, right? Okay. Now what I'm going to do is I'm going to share again the screen for the question, because I need it, right? Okay. Undo. If you can just hold for me a sec quickly. Hi, sorry guys, I think I did not realize my mic was muted. So what I'm saying is, the question that I have on here, what we can do is you guys can look in your individual questions, right? And then what I'll do is I'm only going to put up the Excel, right? So that as I write the answers or the responses, you are able to see what is that I'm writing, right? But now I only have technical issues here because the screen is frozen. So I'm just gonna close quickly and then reopen the Excel on my side, right? Okay. I think it's working now. So you can look from for the question, you can look in your individual questions in front of you. Okay. So I'm gonna share now only the Excel with you. Okay, there is the Excel file. Okay, there is the Excel file. Now, so there is a profit. So we know that we're doing for 2005, and then we know the first requirement that we have in here is that we need to calculate what is the deferred tax balance, and then we need to use the statement of financial position approach, right? Okay. So we know already what's happening here, and we know from this transaction, that one here, we know that there is something. Okay, if I may ask, so your profit before tax, we know where it goes, right? Your profit on sale of vehicle, it doesn't affect your, it doesn't go anywhere in your deferred tax calculation. The dividend received, it doesn't go anywhere in your deferred tax calculation. Then your expenses, fine. Now we have an issue here with warranty cost, right? Because for accounting purposes, it's treated differently compared to what they do in tax, right? But we're going to get that in the additional information. Okay. Now, in respect of point number one, we know that we have our property, so our plant and equipment. I'm going to use short terms now. Right. Fine. So we are now sitting in 31st of December 2004. We've been given what the carrying amount is in 31st of December 2004, which is how much? That was 160,000. Okay. And then they've already given us what the tax base were in 2004. The tax base was 120,000. Okay, fine. Now, our temporary difference is going to be the difference between our carrying amount and our tax base, right? And then it gives us the temporary difference of 40,000. Fine. The deferred tax on that is going to be 28% of the 40,000 is going to be 11,200. Fine. Now, is that an asset or is that a liability? Is that amount an asset or is that amount a liability? Is the 11,200 that we've calculated as our deferred tax, as far as the plant equipment is concerned, is that an asset or is that a liability? Okay, there's no answer. Okay, that's fine. So that is a liability. Amelia, that's correct. That is a liability. Okay, so what I'll do now is I'm going to give you quickly. I normally call this what do I call this? Where did I have that? I can't remember where I had that. Okay, but anyway, so what we'll do now is we're just going to do sort of a small exercise, right? Just to be able to assist you in terms of when do you have a liability and when do you have an asset, right? So I'll just share quickly a table that you've seen before. So I'll share this table with you. Fine. So in front of you here, you have a skeleton in terms of what you will use to calculate a deferred tax as a deferred tax, right? And then here you've got your assets and you've got your liability. And then I've splitted them for a specific purpose. Right? Fine. Now, let's say your carrying amount here is 1,000 Rand, right? And then your tax base, as an example, is 900 Rand. Fine. Then your temporary difference is going to be 100, and therefore you've got 28 Rand as your difference. Fine. So when your carrying amount is more, right, than your tax base, right, that will give you a liability. Right? Fine. Now, and then in the case whereby your current amount is less than your tax base, right? And then that is going to be the opposite, which will give you a asset, right? And then so forth, you will then go in terms of your liability. And I'm doing this to make it easier for you because the question asked you that you need to be able to indicate whether you are dealing with an asset or whether you're dealing with a liability, right? Now I'm going to go back now to the Excel again that we need to use. Fine. So someone has answered me correctly to say that is a liability, and I agree with that. Fine. Now, in your question, you're already given in terms of what is the carrying amount of the plant and equipment in 2005 and what is the tax base. So the carrying amount in 2005 of the plant and equipment would have been 140,000, and then your tax base would have been 80,000, right? and then we have a temporary difference of 60,000. Your carrying amount is more than your tax base. So what do we have? We have a liability. Okay, the same as the previous one. Now we move on to say now we now also have motor vehicles in here. Fine. So you're going to say, okay, this thing is frozen again. Let me just unshare. Share, because it's frozen again. I'm sorry about this. Just gonna reopen quickly. Okay, so okay, it's back on now. Unfortunately, this Excel keeps on freezing on Microsoft Teams. Okay, so we're back again. So for now we're going to say motor vehicles. I'm not going to write the full word. Motor vehicles, 2004, the carrying amount of motor vehicles was 60,000. It was 60, 123,000. The tax base we're given as 72,000. Okay, right? Now we have our carrying amount now is less than what our tax base is, right? Do we have an asset or do we have a liability? So our carrying amount is now less than what our tax base is. So carrying amount 60, tax base 72. Do we have a liability or an asset? That's correct. We have an asset in this regard. Okay. So we have an asset in this regard. There we go. Fine. Now we know what the information for 2005 is. So for motor vehicles, we know in 2005 we've got a carrying amount of 20,000. Okay. And then we've got a tax base of how much? Of 32,000. Okay. And then in this regard, we have 32,000. Okay, and then we have our temporary difference of negative 12,000. Okay, so the same thing. This will be your asset. Okay, yeah, that's it. Fine. Now what we're going to do, we just now go to that additional information for plant and equipment, just to see if we did not miss anything, right? So we're reading again, we know what's happening here, that they sold the vehicle had so much carrying amount, it had so much tax base. So the plant and equipment were acquired 1st of January 2003, we know that. Included is the cost of on 1st of January 2005, for a motor vehicle with a cost price of 40,000. This vehicle was sold on 31st of December 2005 for 35,000, right? Okay. And then the carrying amount and the tax base of the motor vehicle at the date of sale was 10,000 and 16,000 respectively. Now, what do we need to do with these two amounts here? Do we need to adjust anything in here or not? So if you go to carrying amount 2005 and you go to tax base 2005 for motor vehicles, do we need to make any adjustment in the 20,000 as well as in the 32,000? Are there any adjustments that we need to make? Because now they're telling us now that the vehicle was sold, right? And now the vehicle that was sold, they're then giving us what was the carrying amount and then what was the tax base of that vehicle. Is there any adjustment that we need to make at the end of 2005 in the carrying amount as well as the tax base, of that motor vehicle? Is there any adjustment, yes or no, that we need to make in the carrying amount of 2005 for the motor vehicles, as well as the tax basis 2005 for the vehicle as well? Okay, so the answer is no, right? And I'm saying to you the answer is no because if you go into your question, right? In your question, the question says that this extract, right, is from the asset register after the recording of all the asset transaction for the year. So it means that this asset register is already complete. So this information that you're getting from the asset register is already complete. So you are not expected to do any adjustment in that regard, right? So you are not going to adjust anything in the carrying amounts. Now, what I need you to do for me is, I would like you to, for a minute, right? We know there was a disposal of this vehicle. What would have been the accounting entry to record this disposal of this specific vehicle on the 31st of December 2005? What entries would we debit in order for us to record the disposal of this vehicle? What entries would we process to record the disposal of the vehicle, of this vehicle? I'm looking for the entries. Should not be a lot of them. So what entries are you going to push through? So in an exam, you'll ask to say, you need now to record a journal entry to now reflect this disposal of the vehicle. You bought the vehicle for 40,000. Okay, so that 40,000, in my understanding, that 40,000 would have been your cost that you brought the asset in the books with, right? So I would say motor vehicles at cost. It was how much? It was 40,000, right? So now I'm taking it out, because what they would have done, they would have said motor vehicles initially and then debit 40, but now I'm taking it out. Fine. So which statement that would have been? It would have been in your statement of financial position. So we can ignore tax implication in this regard. Fine. What I also know is the question is telling me that this vehicle was sold for 35,000. So I know my bank account was debited with how much? With 35,000, because I've received that money in, right? So I know my bank account was debited by 35,000. Fine. Now, over the period, which means from the 1st of Jan 2003 up until the end of December 2005, there's actually entries that are processed in terms of this vehicle. What are those entries? Okay, so there would have been an entry that would have annually gone to your income statement as a debit, and then it would have gone into your balance, your statement of financial position as a credit, right? So what is that entry? That entry should be your depreciation. Fine, but now what we need to do is that we now need to debit now our accumulated depreciation for over the years. I don't know how much the accumulated depreciation is. We're gonna find out just now. So which statement would that have been? That would have been in your statement of financial position, as well as this one, statement of financial position, right? Now, there is a transaction that's also missing here, because I know, or the question on top is telling me that I have made a profit on sale of vehicle, right? Where would I have recorded that profit? In which statement would I have recorded that profit? Would I have recorded that profit in your profit or loss, or would I have recorded that profit in your statement of financial position? Which statement would that profit have been recorded? Which statement that profit would have been recorded? Is it statement of profit or loss, or is it in your statement of financial position? Okay, so that is correct. That amount would have been recorded in your profit or loss. That's correct, right? Yeah, so we're no longer using income statement, balance sheet. So the proper terminology is a statement of profit or loss, another comprehensive income, and then for short we call it P&L. And then, or your statement of financial position, or we call it SOFP, as I've used the abbreviations here. Okay, so that amount would have been, what is it? That would have been 25,000. So you would have made a profit of 45,000, and then now here gonna be your balancing figure. So I know the total depreciation that has been written off over the period now would have been 30,000. So that's 65, and then that is 65. Okay, fine. So that is the entry that you would have recorded in order now to indicate what that sale, what that disposal or derecognition would have looked like. And obviously here you put here derecognition or sale of an asset, whatever the narration that you're going to put in there. So it's very important that you actually, for each and every item that you do, you actually understand what is the journal implication or what the journal would have processed in that regard. Now, let's go back to the question. Now, okay, fine. Now, point number two says on the 30th of November, which is the current year, right? So we're reading now from the question. Point number two in the question. On 30th of November, they started to sell their products with a 2-year warranty mechanical, just like any other shop that we use. Then they sell a product, we give a warranty to say if there's any default, if there's any issues, bring it back, we're going to repay it under this terms and conditions, right? So what companies normally do, then they make a provision to say if anyone returns, so you buy a kettle, if anyone returns that kettle, whether it's no longer functioning properly or it can't boil water anymore and all those kind of things, then you can bring it back. We're going to repair it for you on your behalf. So that's the provision that they normally make in their statement of financial position, right? So the provision for warranty costs is not deductible, right, for tax purposes, okay? Now, because remember, at that point in time when you're raising the provision, you have not yet paid to repair the cost, to repair whether it's a fridge that the customer returns or whether it's a washing machine that the customer returns. You have not paid for that item. The only time that it becomes deductible, if X or Y or Z brings in the item goes for repairs and then you pay for the repairs. So only the actual repair on warranty costs can you deduct for tax purposes. Now, what this does is it then poses a challenge to say there is now a different treatment between what accounting says and what tax says, right? Accounting says I'm going to show it in my income statement, and then what tax does is say, tax says, no, you can't deduct this as yet because you have not yet paid this, right? So the same concept that is applied for provision for warranty cost. It's the same as it's the same principle that tax applies as far as provision for bonus is concerned, provision for leave is concerned. So that is dealt with within Section 7 Big B of the Income Tax Act. So you only deduct so as far as the leave provision, bonus provision, you only deduct the actual amounts paid, right? So the same thing you would do then for warranty cost, only the actual amount that has been paid. So in this case, what is the actual amount that has been paid for tax purposes? Sorry, not for tax purposes. What is the actual amount that has been paid in relation to the repairs or in relation to warranty cost? What is that amount that has been paid? How much did you pay in the current year to fix or repair client stuff? How much did you pay in the current year? How much have you paid? Okay. So if you go into point number 2 in the scenario, the last sentence, right? The last sentence says during the current year, no warranty costs were incurred in respect of the mechanical warranty for products sold by Kenton Limited. So the answer is 0. That's correct, right? So remember, in 2014 or in 2004, we didn't have any warranty cost, but in 2005, we have the warranty cost. Fine. Now, warranty cost has a credit balance because it's a provision. Okay, so it's going to be 50,000. Okay, for tax purposes, we said the amount is 0. Fine. Is that a liability or is that an asset? Before you answer, remember what I'm saying here. So what this says to us is that this is an amount that I can deduct in future. Right? Now, do we have an asset or do we have a liability in this regard? Is this an asset or is this a liability in this regard? Just say it's an asset or it's a liability. It'll be very easy. I've given you the framework initially in terms of if you have an asset and the carrying amount is more than the tax base, what do you have? And if you have a liability, then the carrying amount is more than the tax base. What do you have? Okay. So if you don't know the answer, you just need to go back to the framework that I've shown you in terms of what the answer is. So in this case, you will have a asset because that is an amount that you can deduct in future. Right, fine. Now, your closing balance of your deferred tax for 2004, your temporary difference is going to be 28,000, and then your deferred tax on that is going to be a liability of 7,840, right? And then for 2005, your movement will have been an asset of 2,000 rand and then a liability of, an asset, deferred tax asset of 560. Fine. Now, let's go back to the question quickly because I just want to make sure every time I write my exams, I need to make sure that I'm actually answering what's required. I know what is required, but I just need to make sure that I'm actually answering what is required, right? So if you go back to, where's the question now? If you go back to your question, you will see your question says you will need to calculate what your deferred tax balance is. Okay, and then they told you that it's for both years, 2004 and 2005, right? And that is what you've done. Okay, but then remember I said now, within the same approach, we can then tackle question C. Question C is asking you that now you need to do that journal entry, right? But now this journal entry now reflects a movement, right? So at this point in time, we do not know whether the journal entry, whether the movement is now a liability or is an asset. Now, what I want you to do for me, I need you to give me a figure in terms of what is the figure for the movement in the current year. Okay, so, and I think one thing that I also need to advise you is that it's always better to make the mistake now so that you can realize where your mistake was and then we correct it together, right? So even if you give me an amount of 1,000 rand liability, 10,000 rand liability, or 50,000 asset, at least you've tried or if you attempted something. Now, when we do it together, you will now see where your mistake was. Okay, so what is that movement amount, whether it's an asset or a liability, that we need to record as an entry that would have appeared in our statement of profit or loss for the current year? Please give me the amount, and then with that amount, you will tell me whether it's a liability or whether it's an asset. Okay, so what is that amount? Please give me that amount. What is that amount? So what is the movement? What is the deferred tax movement in the current year that we will need to disclose in our statement of profit or loss and other comprehensive income for the current year, right? Okay. So the hint is here. So your movement is there. So you started with a negative 7,840 liability, but now you've ended up with an asset of 560, right? Now I need to know what is the movement amount that we are going to show. So you started, so your balance at the end of December 2004 was a liability 7,840, and then your balance at the end of 2005. Okay, let me start first with the movement. Let's do that. Okay, and then your movement for the, or your temporary difference would have been 2,000 Rand and asset, right? Fine. Now, what I need to know is what is the movement in the current year? You started with the liability, and then you end up with an asset. What is that movement? Okay, so let me help you. Fine. Now, so you started, okay, so the answer is 8,400. So you started with 28,000, and then you ended up with an asset of 2,000. So it means that your movement then would have been 30,000, right? Okay. Now, this is going to be difficult for some of you to understand in terms of why I'm doing it this way, but I'm going to show you now why I'm doing it this way. So I'm just going to go quickly to the other sheet where I'm going to show you in terms of the mathematical calculation as to how do you get to 30,000, right? Okay, so I'm going to unshare this screen and then I'm going to share the next screen with you, right? So this is the document that I want to share now with you. Why does it not allow me to share now? Why is it not? Okay, fine. Now I will get to this. Okay, I will get to the deferred tax just now. Fine. So here is your formula here. The formula is your x plus y is equal to z, right? Fine. So what we can do in this case, we can say we're going to make x unknown, right? And then you're going to make y. So y is going to be 28,000, right? Positive 28,000, right? And then you're going to make z. Z is going to be a negative 2,000, right? Now, fine. So now we're trying to solve the equation. So we're saying x plus your y is 28,000, right? Is equal to z, with z is negative 2,000, right? Fine. Now what we do is we're then going to make x the subject, right? So x, we're going to make x the subject, therefore you have minus 2,000 minus, because now we're bringing 28,000 over, and then now we have minus 28,000, right? And then therefore x should be equal to 30,000. So it's minus 30,000. What am I doing now? Okay, there you go. So x is minus 30,000. So that's how I got to how you calculate the movement. So that's how I got how you calculate that movement, right? So the same thing you will do for the deferred tax, right? So the deferred tax, the opening, so what we're going to do for deferred tax, we're going to make x an unknown, and then you're going to make y as negative 7,840, and then we're going to make z 560 positive, right? Let me just illustrate that with you again through an example. Sorry, I'm sharing the wrong one now, sorry. Okay, so here is here. So I'm saying here, so here is my equation. My equation is x plus y is equal to z. Y is now negative 7,840. Z is now 560. And then x is unknown, right? Okay, so what you do is you say x plus negative 7840, okay, is going to give us 560, right? And then we say we make now x the subject, right? Then we say, because remember, so we say 560, now we need to move. Okay, I think I'm sharing the wrong back with you. Sorry, guys, I'm sharing the wrong one with you. Now we need to make now x the subject, right? So when you move 78, so that's a negative. So when you move over, it's going to be a plus 7840, right? And then x is equal to, sorry about this. Then x is equal to, should be 8,400 positive. Okay. So that's how you can make things easier for you. Just use the mathematical formula, and then it should be easy for you. So if you have this formula, I'm telling you, you can solve any movement that they give you. It should not be that difficult, right? Now, what I want us to do, let's go back to the required. The required is asking us to do the journal entry, right? With the journal entry, we're going to record what the journal entry would have been in the either statement of financial position or either in the profit or loss statement. Now, what are the entries that we need to process? So what entry are we going to debit? We know now what the amount is. The amount is 8,400. We know that's 8,400, right? So which accounts are we going to debit? Which accounts are we going to credit? Okay, you can call it deferred. You can call it deferred tax asset, or you can call it deferred tax. And then you can also say deferred tax expense. Okay, fine. Now, so this one is going to be in a statement of financial position, and then that one is going to be in your profit or loss. And then your description there is going to be recognizing movement in deferred tax in the current year. Okay, self-explanatory, but I still want to put that in the current. Okay, so that would have been the entry that you're going to process, right? So now we're done with required A, and then you're also done with required B. Fine. Now required B and C, it can even take us less than 10 minutes to do because everything is there. It's a matter of copying and pasting whatever that needs to be done. Fine. So you just need to have your question in front of you, right? Okay. Now we're going to start with the current tax expense, right? Fine. Now in the current tax expense, so I'm not looking at the amounts. I'm going to try and remember them. You can just sort if they're incorrect. So the profit before tax is 120,000, if I remember correctly, right? Fine. So that we've been given, right? But where else can you use that 120,000 when you are doing your tax rate record? Right? You put it in your tax rate record because you are going to need it there. Fine. Now, we know that we've got items that we need to adjust for. It's exempt items. It's either those items are either taxable or those items are non-deductible, right? And then in your question, you should find them right on top of the question. But I'm not looking at the question now. So I think the first one is your dividends received. Dividends received are non-taxable items, right? I think the amount was 40,000. So the amount was 40K. Fine. So this was the only non-taxable item that we had in there, right? But also what we also have is we have the non-deductible items. If I can remember, it was interest and penalties. and penalties, because this related to the non-payment of VAT, and then that was about 15,000. Okay, that was about 15,000. Fine. Now, what needs to happen here, there is an amount that is missing here, right? And what is that amount is, I think it's going to be your provision for warranty cost. Or am I lying now? No, okay, that's fine. So I think the sign here must be negative, okay? That's fine. Now, remember, okay, this thing is frozen now. Give me a sec quickly. Get back just now. It's frozen quickly. Okay, I'll be back just now. Okay, it's opening, it's opening, it's opening, it's opening, it's opening. Okay, let me share again. Share. Okay, there you go. Okay, it's back again. Fine. Now we can, at the same time, what we can do, we can then go to our tax rate recon, and on our tax rate recon, we know that the dividends that we have, the dividends will never be taxable, right? So we can say tax rate recon exempt items, non-taxable. We can say dividends, dividends. It's so obviously don't forget to multiply by 28%, right? And say that, and you multiply by that 28%. Okay. Okay. Don't forget to multiply by 28%. But also what you have as well is, remember you had the interest and penalties. Interest and penalties. Okay. Remember as well, don't forget to deduct by the, don't multiply by the 28%. Multiply by 28%. Okay. Okay, now it's frozen again, Jesus Christ. Not sure why it is doing this. Sorry guys, these things keep on freezing the Excel, and it's only Excel, unfortunately. I'm gonna put it up again just now. I'm not sure why it's doing this, but it is what it is. Just bear with me. We can even go over the time if it's okay, if it's fine with you guys. I'll just share again. Okay. So there we said interest and penalties. No, it's 15,000. I don't wanna go back and forth now. Otherwise it might freeze again. There we go. I don't know. Just bear with me, guys, with this. I'm not sure why it's freezing all the time. When I put it up just now, okay, and then multiply by that. Because the thing is, I wanna do this with you. So now, if it's not assisting me, then we have a problem. Okay, let me just share with you again. Okay, there we go. So it's that, and it's that. Okay, that's fine. Okay, so I think what we've forgotten here to do, remember the profit before tax, you must also multiply by 28%. So you're going to say 120,000 multiplied by 0.28. Okay. Guys, I am so sorry, but my Excel keeps on freezing. And it's beyond my control, unfortunately. I don't know what could be the issue. We're almost there. Just hold on. Just hold on. We're almost there. Just hold on. So, okay, so that we've multiplied by 28%, that's fine. And then we've also included now the, let's say, our exempt differences. Okay, so that plus that plus that, it should give you 2600, right? That's fine, okay? Now, remember that 2600, right? It's the same that we've calculated in there, okay? But I think what, sorry guys, let me just check quickly. I think what I've forgotten is, so what I'm saying is, we've calculated that plus that gives you 26,600. You will see that that amount it then agrees in terms of what your current tax for the current year is. But what we might have omitted to include, it should be somewhere. Doesn't matter. Anyway. Now here, what you're going to do here on top is we're going to do your income tax expense note, right? So we know in terms of what is our current tax expense. Okay, so it's a current tax expense. Okay, remember that figure was we'll get this figure from here, right? Then that figure is going to be how much is going to be 30. Why would we do quickly? What am I missing now? Okay, I'll quickly go with you just now. So we've got our, oh, okay, I think what I forgot to do is the movement, in temporary differences. So that part we've forgotten to do, guys, the movement in temporary differences, because remember, as part of our calculation, right? So as part of this calculation here, so movement, because you see the line item there says taxable income before temporary differences. So you're going to say movement in temporary differences. Remember that movement is the one that we get here, because that's what we've calculated, right? So this is the movement that we got in there, okay? So now we say our movement in temporary differences, say plus 30,000. So now your current tax payable for the year, it's going to be 35,000. So you're not going to say my current tax payable is going to be 35,123, right? But it does not end there, because remember you also have okay, so it's supposed to be okay. And then you also remember you also had movement. Why is it writing white now? You also had movements. So movements in temporary differences. Temporary differences. Write the full word. Okay. And then your deferred tax movement in temporary differences was 8,400. Okay. 8,400 movement. Okay. So your total tax payable for the year is 26,000, or your SA normal tax is 26,600. That's what your tax note is showing. But also in terms of your effective tax rate calculation should then be the same in terms of what your SA normal tax is, right? So if you see here, I'm trying to do, so the difference between here and there should give you a 0. So that is the check that I always do on my side, just to ensure that whatever that I was supposed to have done, I've actually done the right thing, right? So now what I'm going to show you now is I'm going to show you the other additional step now in terms of what the required section was asking you, which now was the deferred tax note. So this is the income tax expense note, including the recon. But then at the bottom, okay, this thing is freezing again. But then at the bottom, I'm going to show you what your deferred tax note should look like. It's fairly easy because whatever that you have done in the required A, you simply just copy it over into the note. But I'm going to show you now what that note look like. Just bear with me. Okay, we're almost done. Okay, so this is how the note would look like. Okay, I'm not going to write now. This thing is frozen, right? So in this line here, what you would have done, you would say your what do they call it now? Your depreciation or your accelerated wear and tear or accelerated depreciation in terms of tax purposes, and then that amount would have been, I think that amount would have been. Let me just calculate now quickly. That amount would have been 16,800, and then you less 3,360. So that gives you a negative of 13,440. And then now what you also need to show, your provision for warranty cost, it was 14,000. So it's only the deferred tax now that you're showing, right? And then your answer or your balance of the 460,000 should then be able to agree in terms of what you have shown in your deferred tax calculation. That was in terms of required number 1, right? So let me repeat again. How do you do the note to analyze your deferred? How do you do the note to analyze your deferred tax? So what you do is you will say the accelerated depreciation, but for tax purposes. Okay, so where do you get that figure? That figure, you will get it where? You will get it here. 2005, property, plant and equipment, and then motor vehicle, because that's what you're looking at currently. So that figure will be 13,440. So 13,440. Okay, then the next one is, remember, in the current year, we also had provision for warranty cost. Provision. Warranty cost, right? So it was 50,000, but now the deferred tax asset was 14,000. So provision warranty costs. Okay. It was positive. How much was it? 14,000. Okay, so in the end, you must have 560. This 560, it needs to agree with what you have in there, right? So I think the nice thing about this, if you in an exam, you've transferred, if these amounts were incorrect, and then you transfer them directly to here, you should be able to get some marks, because in terms of principle, you've actually followed the right principle, even though in here, they are incorrect, right? So let's just go back quickly to the question just to see if we've actually covered everything, right? So required 1 in the question was saying we need to calculate our deferred tax balance. That is what we've done here. For both years, that's what we've done. And then B said we need to do the tax expense. That's what we've done with the tax expense. We've calculated what the current expense is using the financial statements approach, which is the movement using the financial statement position approach, right? So we've done that, okay? And then, okay. And then the other one was we prepared the journal entry. We've done the journal entry, it is. And the other one was saying we need to do the note to the financial statements. So there are all your notes, your income tax expense note, and your deferred tax note. Okay. Just do me a favor quickly, please don't forget to complete the attendance register as well as the feedback form. So if you have done so already, it's fine, you can ignore it. So please do me that favor before you leave the session. And so I think that's about it for today. Yeah, but the solutions for this, you can find it in the same tutorial letter that you are using. I think that letter 1 or 2, and I think the solutions are right at the back. So if you need this Excel, by all means you can request from me. But the solutions are available in the chat letter. And I think that's about it for tonight. And then I'll see you again now next week, same time. And that's it. Thank you for being with me, and thank you for participating during the session. Thank you.